as my panelists get settled down here, first of all, I want to say that March is Women's Month, and we actually have more women on this panel than men. So shout out to the women here, which is very exciting. Women in tech, yay! Also, just wanted to let you guys know what we're going to do here is educate you on blockchain and Web3 and other future technologies and why this is important to you and your organization. Just one quick word for me is that I grew up with a father who worked for Polaroid. Polaroid made all of their money from the film, from their instant film. And then my father was doing so well, and then digital photography came onto the scene, and Polaroid was like, you know what, our business model is set up so that we make our money from selling the film. And they didn't pivot, they didn't make any changes because it would be just too much work to do that. And overnight, their stock, honest to God, it went to zero. I remember when it happened and it was heartbreaking. So don't be the Polaroid out there. Please pay attention to the new tech that's coming our way, even if you think it's too big of a jump, because you're gonna need to keep on top of that, otherwise you might have some problems overnight. We don't want that. So enough from me. I'm Becky from CoinGeek.com. And I would like for each of my panelists to please introduce themselves, and then we will get started. But I'm going to start all the way on the end there with Kuba.
Does it work? Hi everyone, I'm Kuba Tesas. I'm a local innovation digital emerging tech lead for EY Czech Republic and also representing our region on a blockchain level. So yeah, I'm all about the business in this field, helping with tech for our enterprise clients, and really happy to be here with Becky and all the other panelists today.
Hello, good morning to everyone. Yeah, it's okay. My name is Dean Rakic. I came from Germany. Actually, I was not originally from Germany, but lived for such long years in Germany. Actually, partially in Germany and Switzerland, lecturing on a few universities on a blockchain, artificial intelligence, data science, big data analytics, and such kind of things, that the novel things. And also leading a company in Germany as a CEO and the chief scientist about the blockchain and artificial intelligence.
Hello, my name is Merit. I've been in finance nearly 20 years and in compliance, regulatory compliance, specialized for anti-money laundering, counter-terrorist financing and risk assessment management, about 15 years. Today I'm expert for auditors, how to audit cryptocurrency companies.
Hello, dear audience. My name is Anna Agu. I'm managing partner and co-founder at Lex Law Office. We are a law firm based in Tallinn, Estonia, and Vilnius, Lithuania, helping with the legal matters, crypto, blockchain, fintech, and iGaming projects since 2017, with compliance, structuring, corporate law, and other regulatory matters.
And like I said, I'm Becky from CoinGeek.com. I've been in the online gambling industry since 2005. More recently made a bit of a pivot to the blockchain world under the CoinGeek brand, where we focus on the BSV blockchain in particular. And just so a bit about the panel here, we're going to talk about, like I said, blockchain and Web3. And I would love for you guys to interact with us. So if you've got questions, I'll take a couple of breaks and ask you guys if you would like to ask the panelists anything about these topics. And we will be with you until 10:30. So let's get started. The first thing I want to do is talk a bit about blockchain. And Kuba, I'm going to start with you here because we've had a bunch of waves of blockchain when it comes to adoption. I feel like some people even think that the blockchain phase is over and we moved on from it, now we're looking at AI. But I wanted for Kuba to give us a bit of an overview of what's really happening here in the blockchain space.
Happy to do that. It's a let's say short history of the blockchain of the whole tech. I guess we can start with internet in '83, right? And I believe that was Mark Andreessen, founder of Andreessen Horowitz, that said that the original sin of internet is that it doesn't provide a way how to exchange value because the world wasn't ready. We weren't able to really pay for things on the internet by ourselves. And since then, we moved towards advertisements that is paying for our data on the internet and various other ways how these big tech companies are leveraging our data and this allows us to do stuff on the internet for free. And this was pre-blockchain era, I would say. And then, in 2008, there was this financial crisis in US. It was related to real estate, right? And Satoshi Nakamoto came in 2009, and they implemented Bitcoin as the countermeasure, let's say, to this financial crisis when we were printing money and we were really doing business on thin air. And from that era until, let's say, 2011, we started to measure 4 major indicators of these waves. The first one was really the revenues that we are generating from year to year. We were measuring the social engagement, how many people are joining blockchain, how many people are interacting with it. We started to measure how many new projects and new developers are joining the space. And all of this is growing since 2009 in a, let's say, exponential manner. And every wave, this was the first one from 2009 to 2011. Everything is growing. And from the first wave, we resulted with Bitcoin as a digital gold way of payments, but it wasn't really suitable for general public. So in 2011, we started the second wave, and that was when Ethereum and other programmable blockchains came, and it allowed new use cases that we were able to start interacting with. And this was the ICO era. You might remember that. Every use case had its coin, had its own blockchain. And we found out that this is not the way. So what we end up with from the second wave, that was Ethereum, public blockchain, programmable blockchains. In the third wave, it was from 2018, I would say, 17 maybe. That was the era of stable coins. You might remember that this is one of the major breakthroughs because there's already a couple of billions of USD tokenized on blockchain, and this allows new use cases how to interact business to business, business to customer. There was DeFi introduced in 2017. It's like a petri dish for new use cases in financial space. A couple of other use cases. Besides that, also NFTs. I would say don't think about NFTs such as pictures on the internet. Think about really any asset you can tokenize that could be NFT. And then the last wave we went through, that was from 2021 farther, and this was really era of maturing. We came up with layer 2s on top of public blockchains, which allow more capacity, lower fees, much more new use cases, much more people interacting with them for free almost. We came up with proof of stake, which allows us really to have sustainable infrastructure instead of these huge data centers running the blockchain. And yeah, that was end of the fourth era we went through, and now we are on the beginning of the fifth one, which will be focused mostly on mass adoption. You probably know that there's already 11 spot Bitcoin ETFs, so that will bring mass market on the blockchain. We have Mika, we have SEC talking about securitization, about tokenization, so regulatory clarity, it's not here, it's coming. And the last thing is that from the past era, most of the, let's say, bad guys are already in jail or being sued. So we can expect that it will be more suitable for everyone and for businesses as well.
Yeah, it's been quite a wild ride, and I remember going to gambling conferences when there were whole sessions on NFTs and about decentralization, everything, and then we moved on and forgot about it. And anyway, so mass adoption is coming, but I wanted to tie back blockchain specifically to the online gambling industry and kind of where we are now. So I'm going to start actually with Anna here and maybe talk to us a bit about when it comes to payments and digital currency, cryptocurrency, where are we with that in iGaming?
Yeah, let's start maybe with some statistic data. If we are talking about the virtual currencies, then in the world there is 119 countries which are accepting virtual currencies, so they are illegal, and there is only 39 countries where cryptocurrencies are banned today. And if we are talking about the Europe, we are now located in Prague, so we are quite like a leading, let's say, area of the adoption of the virtual currencies, because 39 countries of 41 are accepting virtual currencies, so they are absolutely legal. In terms of the regulation of the virtual currencies, we are having the upcoming regulation with the name of MiCA. This will be the fundamental regulation for the crypto assets and virtual asset service providers in general, and it will affect a lot the current market that we have. So if we are talking about the collaboration between two industries, gambling, gaming, and virtual currencies today, I will say like 90% of the crypto processing firms are working with the gambling and the gaming companies. They are the majority of their turnover. And so this collaboration is very close. What we will see in the future with the upcoming regulatory challenges and changes, there will be much higher requirements for the virtual currency service providers, for the companies who are processing the crypto payments, providing the opportunity to exchange the cryptocurrencies or safeguard the cryptocurrencies. They will need to meet several requirements and submit the authorization for the financial regulators to be authorized. And coming to this, of course, it will lead us to the situation where we have less market participants. They will be much stronger. There will be transparency, but there will be higher requirements to enter the market. And of course, it will affect the price of the services. So this is the situation that we will see in the future. The collaboration between gaming and cryptocurrency service providers is very close. So they need to start the very, let's say, deep communication to understand the new upcoming regulatory requirements, to be in line with the procedures of each company, to move forward together. Because if, for example, gambling company is doing one due diligence process and cryptocurrency service provider is doing another, then you will have troubles. So they need to be in line. They need to be in line with the company procedure, risk assessments of the both companies, but and of course the regulation.
Very nice, thank you. Anna and Merit, what do you have to add to that?
Yeah, I would like to add also that it's totally true that actually that's, I think, also the current state where gambling entities, their regulation is, how to say, so much maybe not lighter, but VASPs today, virtual asset service providers, it's more strict for them. So they are, I don't, like in my opinion or according to my experience, I haven't seen that they are equal in this meaning or in this matter.
Very good, thank you. And in my world, when we focus on blockchain and where it intersects with the online gambling world, we talk quite a bit about micropayments, which is an interesting area, and we also talk about the ability to store data, and it's immutable, and all of this good stuff. So I'm gonna go now to my blockchain technical expert here, Dean, who also is working on, I believe, his own blockchain. And yes, has some insights on other ways that blockchain can superpower the online gambling space that even goes beyond just getting money in and out.
Yes, for sure. In the last decade, approximately, we approached the meaning that only the payment thing and the cryptocurrencies are blockchains. Actually, the blockchains gives an ability to any industry, not only a gaming or a gambling, to proceed with some payment. We estimate such a big problems with the pump-dump schemas and all other things that happens in the last years with the cryptocurrencies. We have more than 90% of the cryptocurrencies that actually does not exist on the market. They are just virtual, presented and indexed somewhere. There is no a real asset that these currencies covers actually, or some service or any kind of some value. The payment is actually the first point where the cryptocurrencies meet the gambling and the gaming industry. The problem of fragmentation that happens in the mean of payments in the gambling and the gambling industry, or small amounts in the micro and nano values, appears as a problem because of the fees and too centralized protocols and rules that comes up with the banks and all other payments providers. The blockchain gives, with all of these things about the cryptos, gives an ability to be engaged into the gaming and the gambling industry as a solver of this problem about the fragmentation. And it starts being, but the problem appears with the trust. It's still a problem with the trust, why the cryptocurrencies and the blockchain is not fully involved in the gaming and the gambling industry, because so many pump and dump schemas, as I mentioned, removes the trust between the gamers and the game providers and all others. In the next period, I'm expecting that the cryptos will remain in any kind of digital form, otherwise, or some kind of digital money, whatever. The principle of the blockchain, or not only decentralized, but because we are still not decentralized completely, we need some more times to be decentralized in the whole industry. So, although there is an initiative that each blockchain is decentralized, actually they are not still. They are distributed but not decentralized completely. And the fragmentation that happens between the technology and the rules in the game and the gambling industry actually builds still a bridge that need to be rebuilt with some new interoperable data structures. Because when we are talking about payments or all other things that we need in the gambling industry, the mean of payments that we are talking about in the cryptos and the blockchains is not the money, it's a data. We are dealing with data. And we still have too many protocols, too many standards, whatever, either regulations and other compliance obstacles that actually breaking the industry of the gaming, iGaming, whatever, and the gambling. And we need actually to make the interoperability between all of them. We have to put them to talk to the same language, no matter from what industry they come from, no matter what means of payment they use, no matter which platform they use. That's the point. And actually, I worked on that point last 5 years and built a completely new consensus protocol, a new blockchain. There is no mining, there is no proof of staking, there is no any existing protocols. It's built on the post-resistant quantum algorithm, on the lattice mathematics methodology, and actually builds an interoperability and bridges centralized and decentralized the world. That's the point on the zero layer level between, above actually, Bitcoin and Ethereum levels, which are on the level 1, because all of existing, the Ethereum and the Bitcoin are on the most mouth talking about, yes, we are blockchains and we are cryptos. That's true, that's right. But they are still on the layer 1, and they are actually a foundation for building other blockchains. The Bitcoin and the Ethereum are not blockchains. They are foundation levels. And all others are built from the level 2 and upper. But from the level 2 up to the level 1, no one of them does not put all of these things of data and transactional processing at the layer 0, where actually should be in existence. All transactions physically should happen on the layer 0. And everything other should be built up on the layers. Depends on the application level of usage. Therefore, I built a completely new blockchain, means at the layer 0 with complete interoperability, gave us a full trust. There is no barrier with what kind of data some source have, if from each industry, whatever. It could be financial data, it could be a video or a stream or complete game, whatever. And also from another side, from any existing blockchain that exists nowadays. Either is encrypted or whatever. That means the interoperability is a point of giving the same method of understanding data and using data for creating a value from any kind of, from any side. But it's not a full stop there, creating a value, because if we just create a value, it's once created value. The point is to create a continuous value on every transaction. That need to be the value means the data seamlessly flow from one side to another side. That's the point.
Very good. Hopefully we didn't lose anyone here. And I guess it's not actually that important. You need to know about layer 0, layer 1, layer 2. But I wanted also for you, Dean, to maybe give a use case or explain to the group, the crowd here, how they can use a micropayment or a nano payment. Why would that be interesting to the online gambling world? How will that improve their business?
Yeah. I mentioned the fragmentation. The problem of fragmentation still exists from any payment gateways provider, whatever. And normally when we are going through layers, we do not have enough time to go through layers to explain layers in the blockchains and applications, whatever, it doesn't matter at the moment now. But from layer to layer and from creating one currency, cryptocurrency, to another cryptocurrency and swapping and using all other methods, putting higher value of fees that actually disharm the complete area of engaging a cryptocurrency into the gambling and the gaming industry. Micro and nano payments are actually these fragmented parts that enables for each transaction to be on the lower fee adopted from any gamer or provider.
Very good, thank you. And Kuba, I know that your focus isn't necessarily the online gambling world, but with your clients, I know that you help them automate things and you use smart contracts in order to do this, or advise them on how to use smart contracts in order to do this via Ethereum, I believe. Can you just describe to our audience here how you're helping your clients automate?
Sure.
Using blockchain.
if you imagine programmable blockchain, it comes with these smart contracts. It basically, in business terms, allows you to do two things. Any asset you have in your company, it could be a picture, it could be fiat money, it could be a barrel of oil or ounce of gold. Anything could be tokenized on blockchain and represent that asset. Instead of having it in a centralized repository such as bank or something else, you have it on the blockchain so you can trade it freely and do business with your partners and users. So token, that's the first part. And the second part is really the smart contract itself that allows you to really automate your business logic. So any contract you might have with your peers, you can translate into these smart contracts, and they are triggered by incoming token with something else, and automatically process all these transactions that happen between two or more parties. So one party just have stuff or products, the other one has money they want to exchange. So you do it in the smart contract, and you don't need these huge armies of people on the back end reconciling all the transactions. So this really helps to do business effectively with your partners. I always give an example of Henry Ford's River Rouge factory in Detroit. There was a time in 1970s when everything that you needed came into this one factory on one side, and on the other side it was just spitting cars. That doesn't happen anymore. You have businesses that interact with other businesses, and you are bringing pre-assembled parts. You just assemble them into your product and move it to your customers. So this way you really need to manage the outside environment through blockchain instead of focusing on what's inside through ERPs such as SAP. And to conclude that, how we do that through tokenization and these smart contracts. For example, one of our major clients is Microsoft Xbox. So yes, we, EY, are delivering software development to Microsoft. Funny. And what they are seeking, they have this huge ecosystem of players on one side and game developers on the other side, and there's a couple of thousands of contracts between all of them. And they need to, Microsoft Xbox, they need to get the payments from, micropayments, for example, from the player to the developer. And I believe there's like 25,000 transactions per day happening in there, and we all put it on the blockchain. And instead of really reconciling it manually through several systems in Microsoft, which took 45 days, now it's happening in 4 minutes on the chain without any manual interactions. It's all transparent, traceable, no manual errors in there. So it's probably the closest I can get to iGaming.
Very good, thank you. And I know in the news, I'm sure we've all heard about the crypto scams, like we have discussed on the panel already just a little bit, touched on that, FTX, exchanges, this sort of thing. We also hear about the price of Bitcoin all the time. These are the two things we always hear about. And I just wanted for the panelists here to explain how this impacts the adoption of blockchain in industries like ours. But Merritt, can you talk to us a bit about the crypto scams that we've heard about, like I said, and where we are with them, how we're going to prevent this from happening, how this impacts blockchain in our space.
Thank you. Yeah, scams are definitely there still. But what I can tell, for example, like NFTs, what I've seen, I'm just speaking about my experience, what I've seen. It's like NFTs, for example, it is created by someone stranger, and it has been bought also from how to say, related person of who created the NFT. So, and the money comes from just totally anonymous place. So that's one of the example. Another example is also like the main issue actually regarding scams is also anonymity. Is where like we don't know who is behind that, and also source of funds and source of wealth, where the money comes from. That's from money laundering or like terrorist financing side or anti-money laundering. But how we can prevent this is definitely with appropriate due diligence measures, KYC, transaction monitoring, and so on. So this is definitely the how to say measure how to prevent it. But actually here I also see a big risk between virtual asset service providers and gaming entities, is that the scams today is mostly like virtual asset service providers because they are newer than gaming entities. So the scams are more like located there. And if a gaming entity and virtual asset service providers cooperate, it means that it will also forward to gaming entities.
Yes, please.
Can I elaborate on this? I would like to add, of course, we have still the problems with the money laundering related to the crypto assets, and we have several scams, but in general, you need to remember that it's a part of the financial ecosystem. The virtual currencies are a part of the financial ecosystem, and if we are talking about the scams, there is absolutely nothing new. The same scams are happening in the traditional financial world. It's traditional Ponzi scams, which is the main. So basically, illegal companies are calling and giving like emotional impact on the people to pushing them to invest for the virtual currencies, which are highly violative, and they might lose potentially their value within the seconds. And we are having the situation of the, let's say, not fair promises on the particular virtual currencies and token issuers. So everything related to this can be actually fixed by several steps. First of all, if there is a proper regulation, which will come in force really soon, Mika is just behind the corner, we will have the fundamental regulation within the European Union. What does it mean actually for the market participants and for the consumers is that if you create your company in Czech Republic or you create the company in Lithuania, you will have absolutely the same regulatory requirements and you need to meet the same rules, which means that within the European Union we have the ecosystem which is transparent and acting according to the same regulation. And for the consumer, the aim of the MiCA regulation is to protect them, because if the environment is transparent, acting according to the same regulation, we can potentially have less scams and less, let's say, illegal activities by the market participants. But important thing that I wanted to highlight, that there is like a myth that virtual currencies are always related with the scams, they're always related with the money laundering. It's actually absolutely not correct, because according to the statistic data, less of 4% of the crypto transactions in general were related with illegal activities or money laundering. If we are comparing this to the traditional finance world, the percentage is even higher. So it's very comfortable to say that cryptocurrencies are always related with scams, illegal activity, darknet, etc., etc. It's very comfortable myth for the central banks, but in reality, the statistics that we have today is actually a little bit different. But of course, it's important to invest in regulatory, let's say, compliance for the companies who are providing such services. It's important for the consumers to understand where they are investing their money. And by the upcoming regulation within the MiCA, there will be a public register within the European Union. So for example, you as a consumer or you as a partner, if you would like to check your possible partner for the virtual currency services, you can check if they are compliant, if they're regulated, if they're having the passporting in your country, etc., etc. So you can do your homework to understand if your partner is actually like reliable. So I think that this is also like important to share with the audience, that it's not that bad as it is shown actually.
Honestly, it reminds me so much of the online gambling industry in 2005. I don't know who remembers it back then, but it was like unregulated, wild, wild west. It was crazy. But then regulations came in, and now we're all following all the rules. Lots to learn from iGaming. So I also mentioned that the price of Bitcoin especially is something that we see quite a bit in the news, and honestly, it's the question I get the most from anyone. They're like, oh, what should I invest in? I'm like, oh, I don't even look at the coin price. But there is an impact on mass adoption when we hear about the price of coins, and I know that Kuba has some insights on how, when you hear about the rising price of Bitcoin, how it impacts your job over at Ernst & Young. Tell us what happens.
Well, yeah, we have lots of NDAs, so I cannot really discuss that in a much broader sense. But I guess you all can sense that the more the price is rising, the more people are coming to the space, the more buzz is in the social media. So it attracts new funding, venture capital. They invest in new products and projects. They deliver more buzz, and then the price is rising even more. So that's you would guess that this happens for end user, right? Because they don't have all these compliance in the back end. But to be honest, also our clients have the same feeling of urgency that they have to rush into blockchain at the time when the price is rising and when it's on the peak. So yeah, I guess that's my comment.
I laugh because, like I said, it's the everyday. What do I invest in? I'm like, guys, I talked about the data on chain, not about the price. But another area where I don't know how familiar the crowd is here with blockchain, but is what blockchain to use, what are the differences? People get very passionate about this. It's a very, can be a very religious movement, which blockchain you go with. But I do have two guys here on the end, which I know are looking at the blockchain world in a bit of a different way when it comes to what chains they're working with and following. Hopefully I want a little bit of arguments. But I'm going to start with Dean, and I wanted for you to explain to the audience here what characteristics you've really focused on for the blockchain that you're building, and how it differs from Ethereum and maybe Bitcoin and some of the other big ones, and why you've chosen it that way.
Yeah, there are still a big difference between technology that actually, when we are talking about a blockchain, actually we are not talking about cryptocurrencies, we are talking about a technology that should be involved in some industries. I spent a lot of years, actually I'm approximately 29 years in the data science, and the last 12 years in the blockchain, built already 7 patents in the blockchain technology. And the last 5 years, I put myself into the point to get all blockchains at one stage. at one point, to means to be interoperable. As for instance, the Bitcoin appears as a derivative of a Bitcoin, of the blockchain technology. Afterwards comes an Ethereum on the same layer. The both are actually the foundation for building a blockchains and creating some kind of wealth. There is such a big difference between them. Actually, the Ethereum started with the same protocol with a proof of work, and moved afterwards to the proof of stake, but the still problem exists. We are talking about a decentralization, but none of them is not actually decentralized. In the core of all of them, and the both of them and the all of others, is a Merkle root and a Merkle tree, which actually a centralized point of hashing data from their leaves of transactions. And there is no actually a real decentralization that still exists. We have to move a little bit forward. Distribution, yes, distributed. Both of them are distributed, and all of others built on the Ethereum base are distributed. The smart contract that actually does not appear with the Ethereum, actually 1994, a Hungarian mathematician Szabo built a smart contract, and Ethereum used that principle on mathematical level to make this adoption of the blockchain much more easy and convenient. But we are still in the problem that for almost each use case, we need a smart contract to be created and built. The point is to embed, however it is called, smart contract or any kind of self-executed algorithm or application that could accept any kind of data from any source. And actually, this is the point where I'm building a new way, I cannot say maybe revolutionize the blockchains between them and connecting with a third party. The third party in the for the blockchains is actually our world.
So Kuba, why Ethereum? I know that's your thing. Tell me why.
Right, and I guess there won't be any dispute with Dean. I agree on the principles and he said. And my vision of future is that Ethereum has had such major head start against the others that we'll just concentrate more and more of the development into this one ecosystem and build, as Dean said previously, the other layers on top of that. So Ethereum will play just the centralized part that will settle, the ultimate value settlement will happen on that blockchain, and it's still evolving, it's still in a very early stage, and we have a long roadmap of what needs to be delivered to make it really decentralized and scalable and secure, and to even improve user experience. There's so many things that needs to happen. So yeah, my vision is concentrated around Ethereum ecosystem and its roadmap, because none of the projects I see, at least the public one, the major ones, doesn't have such compelling vision of the future.
Yes, please.
Can I add a little bit on the scalability? I think that it's one of the most important problems or concerns related to the mass adoptions, because literally if we are talking about the scalability, like even Vitaly Buterin said that we have this trilogy dilemma when the blockchains can choose between scalability, security, and full decentralization, and they cannot achieve all three at the same time, so they need to choose between two. And if we are talking about the scalability and let's say speed of the transactions, then we are still today in the situation when Bitcoin can process 6 transactions per second, Ethereum 20, and MasterCard 24,000. So this is I think the problem that we have, and we need to like.
It's not a problem; it's an obstacle.
Yeah, it's okay.
It's an obstacle. It's not a problem, and this obstacle leads us to the challenge. Actually.
Yes. Absolutely.
Technically, you're right, and still exists on that level. And the scalability is a problem, but it's actually not a problem anymore. We have enough technology to overcome all of these things that happens with the Bitcoin-based and the Ethereum-based principles of having transactions in the Merkle tree. numerical root, and the routing and encrypting those data and on that way. Actually, last week I have tested this new blockchain that I built with just 2 nodes, 56 transactions per second, and creating 1 block in 2 milliseconds. That means the technology gave us an ability to overcome this and broke the trilemma. Actually, I agree with the Buterin's trilemma about that, but I have extended this trilemma and will be published next week scientifically.
Excited.
If I may, I have also two comments. We also work on the scalability of blockchain. So this roadmap I mentioned, it will get rid of this issue. And our firm itself is working on layer 2s and such solutions that will allow whole industries to get on top of Ethereum blockchain in a scalable manner. So the transaction would be very cheap, but as well, the throughput will be in billions of transactions in a second. So that's already happening, and hopefully we'll get there soon. And maybe one more comment on what Merit said previously about anonymity. That's another issue, because by default, all the transactions on blockchain, they are traceable, they are visible. So once you get doxed and someone knows what's your address on the blockchain, they can trace your business. They can basically reverse engineer what you're doing, with whom you operate, what prices there are, what's the exchange of goods, and maybe get into your business too deep. So for that, there are a couple of solutions that allow anonymity, but these are they don't work with regulators, right? So another thing we are working on is privacy on top of public blockchain. So this way, you would comply with regulators through some things that you need to do. I don't want to go into detail, but for your competition and everyone else, it will be all private, and they wouldn't see your transactions nor what's happening inside the contracts you developed and put on chain. So scalability and privacy, I would say.
Sorry, now we open another one point of this thing. I have to add also part of it about scam and anonymity and all of these things. We suffer actually from that. It's not a problem that are we able or are we keen to regulate that or to handle the kind of anonymity or digging into one business on the distributed public ledger or whatever. The scam exists. Such a long years ago. It's not something that appears with the digital transformation that we are surviving nowadays and the last decade, and will exist in the future, of course. There is no such a 100% technology that will cut off the scams and says, yes, that's the solution. We are going at one point where we can meet an area actually where the scams has no meaning. We have to left the scammers without job. That's the only point. We can build the technology from one side, and from another side, the regulators does not follow that. We are at that point, at that situation now. The regulations cannot follow the technology overspeeding that things happens and changes over the night. And at that moment, we start KIC, of course, I agree with the KIC, with digital identity, which is the foundation of the Web3. Normally, we have to identify ourselves. There is no need for the anonymity. The part of the transactions that we are pushing on the public blockchain should be encrypted and actually by encryption anonymized. But all other things, if everything transparent, we are talking about a transparency by using a blockchain technology. Why then we are talking about this differentiation? It should be a trustless, transparent, and immutable. Then there is no problem and no diverse between the regulators and a unity regulation, MiCAR, and all others. It's just a pile of paper. If we do not agree to implement the technology and this regulation together and to put, because we have still our blockchains, they are anonymous. what we are talking about. There is no way. I'm not against anonymity. There is not a problem. But are we agree to be completely anonymous or identified? If we're towards ourselves with the Web3 and we're all talking about open content, then why the anonymity? And there is no a place for the scam at that place.
Can I add a little bit on that? Actually, the regulation is moving forward, but always behind the technology. This is like the reality, because people who are developing the technology, they have the idea first, and regulator are there after 5 years later, when they understand that this is already the majority of the problem, and they need to find some kind of the solution. But in terms of anonymity, there was like a recent information that European Parliament voted for the new amendments of the AML regulation, which will come in force within the next 3 years, and it's also related to the anonymous wallets. So there will be an obligation to verify, even for the cold wallet service providers, the identity of the users. So basically, it's like kind of ban of the anonymous wallets within the European Union. We will see how it will be implemented, because it's quite interesting. Because until now, there is a common understanding if the company is providing the custodian wallet services and they are holding the keys of the wallets of the customers, they are obligated entities according to the law, and they need to be regulated, they need to be authorized, they need to get a license, meet the AML requirements, etc., etc. But it was not applicable for the, let's say, pure technology service providers, let's say cold wallet solutions, when the client is holding the keys and ownership of the keys by itself. So it's a like completely new shifting approach, and we will see how it will be implemented, but it's already on the table, and it was voted on the 18th of March. So yeah, we are slightly moving there, but we're still behind here.
Very good. And there's one point I just wanted to make sure you guys didn't miss that we mentioned a few minutes ago. The panelists said that the technology is there for scalability when it comes to blockchain. It is here, and I know that our I should say, just not my company, but the people in the BSV world are working on a project called Terranode, where there's like 1 million transactions per second, huge blocks, really cheap fees. So the tech is there. You just have to do a little bit of research on it. But does anyone have any questions before we jump into a little bit of Web3 before the panel ends? Anybody? No. Okay. So since our panel is blockchain and Web3, let's talk a little bit about Web3 before we run out of time. But just to make a quick bridge between blockchain and Web3 and how they're connected, Dean, can you just give us a super quick highlight there?
Just quickly. Cuba previously explained the history of actually internet, which actually belongs by phases 1, 2, 3 up to now, and completely parallel for the Web 1, Web 2, Web 3 forms. As the Web 1 actually started with a static content at the beginning, with the static pages actually, without possibility for users to interact something and to change and to add some dynamic content. It is actually the first decentralization, and it is not called at that moment a blockchain, but it was a distributed and decentralized approach of the internet at the beginning from that state. From 2000, we moved to the much more dynamic, much more open, where the content comes up to be changed, and the users actually on the internet got an ability to put some content inside, without so much control, of course. But it was actually the phase of the Web 2, and still nowadays is extended, re-extended several times, and we're approaching the Web 3 nowadays. In the meantime, we got a blockchain as a technology built on the distributed ledger databases and distributed data in the principle. And blockchain builds actually a foundation for the Web 3. Why? Because of having a content on a trustless and identified content value. Therefore, there is a place for other technologies, of course, for the artificial intelligence, for the data science, analytics, whatever, because it's Web3 should remains and at the moment is still open and should remain open for any user, from any device, from any content to be shared or exchanged. And therefore we need a blockchain, actually we not need, it's actually there for the Web3 as a foundation for building a Web3 to have a trustless, immutable, and non-scalable internet actually. And all protocols actually belongs to the Web3, connected to the Web3. It's not anymore the IP4, it's IPv6, and all these protocols actually built a foundation from the technical perspective for the Web3. We have it. It is still a little bit more time to be adopted and used from the content perspective from the user, that any user can express its content directly to another one without central intermediary. That's the point.
Yeah, it's all about interconnectedness this year. We have IoT, we have IPv6 with all the IP addresses, and we have wallets connected for payments and everything. So much data that we need to keep track of. And Merit, can you tell us who's going to be responsible for all of this data? There's just so much. Is it the VASPs? Who is it? Who's responsible?
Yeah, so the thing is that how basically, like how iGaming or like VASPs can be collaborate will be, for example, merchant agreements or other agreement forms. So, for example, based on that example, I could say that it depends on who collects the data. How is it determined, like in the agreement? How is it set, the rules? Who is collecting the data, KYC data? Because, for example, let's imagine VASP and also gambling, online gambling, they're both obligated entities, which means that they both actually have to collect the data. But however, then based on the agreement, there might be difference. For example, like reliance on the third party, or like reliance on this your partner data. But again, how you collect the data. Another point of view is that, for example, let's imagine that gambling entity, they have like due diligence obligations starting from €1,000 per year or per month or whatever. But VASP has to identify or like ask or apply due diligence measures the first place, like from the identity verification, which means that there is also like there is difference. And then, like, for example, if, I don't know, VASP has to collect in any case the data, but gambling entity do not collect the data, like not less than €1,000, then there is a difference, and it all has to set in agreement.
Yeah, and I would like to add that actually this is a very important point. Like, we have the common practice in the industry related to the, let's say, resilience practice, when the company, even if it is a gaming company or cryptocurrency service provider, Casper VASP, they are using like technology solutions for the transaction monitoring or for KYC purposes, and they are using this data to make the final decision related to the client and related to the particular transaction. But the problems that we have, that sometimes if we have such resilience or outsourced services, it's also delivering the problem with the speed of those decisions. And the recent information that, for example, Solaris, which is one of the biggest fintech companies in the European Union, they just received a fine of 6.5 million by the BaFin, and it's totally related on the speed of the reporting. So the case was that they had a partner who was responsible for the KYC, for analytics, etc. Then they were monitoring in-house the transaction, and the regulator said, guys, you are dealing with one situation, with one suspicious transaction for 4 days, let's say in total, and it's too slow. We do not think that your system is sufficient. Here is your fine of 6.5 million, which is more than 5% of the turnover of this company of the previous year, and they are with this situation. So this is actually like the real problems that market participants are facing at the moment, and even if they're not facing, they will face this in the future. So they need to review the processes, they need to be sure that this is sufficient, this is in line with the regulation, this is in line with the expectation of the regulators, because it's something totally different. Sometimes we have the rules in the regulation, but expectation of the regulators is something more. So we need to take it into account. You need to have the good advisors, you need to have the strong team who are having this knowledge to grow up and not to face such problems.
I would like to add shortly, also the same reporting, the speed of the reporting. It's related, the same example what I just spoke, but it's like, what if you have customers? So it's the same, like how fast you get the data and so on. So it's pretty much related.
I agree with you, ladies, completely. That's a nice explanation and approach that you brought. But we're still talking about delivery of data and the problems during the delivery, and yet from the end user approach, from the end user side. The Web3, actually, which we have already mentioned, push us completely at another point. We have to talk about the data custodians, not about the delivery. The data custodians should be put on the top of this problem about this topic, because from the moment when the data are ingested, created from someone and pushed to the network, because we are living in the networks, and the network will remains, no matter how we will look on that. Digital world will remain, especially in the next decade for sure. And networking with data comes up from the data custodians. It is too late. We are still struggling. Me too. I'm also in that part with the regulators, with to whom belongs the data, who is the data owner, what about data, are data secure, are the real data, is the source trust, whatever. But we have to go a little back on the position where the data are ingested. And that gives the opportunity, the data custodian should follow the way of its data up to the end point, and the regulators will not have so much a problem to regulate it.
Very good. Well, that is our time, guys. Sorry if you had questions, just grab them during a break. And thank you so much, and most of all, thank you to the panelists.
Thank you.
Thank you.